In 2019, Jumia became the first African tech company to list on the New York Stock Exchange.
E-commerce firm Jumia launched its IPO this week on the New York Stock
It was
Exchange.
called Africa's Amazon.
Now, the African e-commerce giant sold 13.5 million American depository shares at $14.50 each.
Investors poured in billions.
The listing of Jumia is already causing market jitters.
The stock soared.
And the shares, they surged more than 70% on its first day of trading.
And for a moment, it felt as though Africa had cracked e-commerce.
And there is no one really competing with us, at the Pan-African level.
What is it that makes Jumia special?
But that did not last.
Within months, that momentum began to collapse.
After making a debut of $14.50 for its historic initial public offering on April 12, Jumia's stock initially soared, but it has dropped to their lowest level since these allegations were brought up.
The stock dipped. Investors' confidence were at an all-time low.
Jumia stock plunges by over 70% just weeks after its IPO on the New York Stock Exchange,
with the stock recording 6 straight days of decline.
Operations were in shambles.
From all indications, Jumia is currently going through a rough patch.
And for one moment, it looked as though Jumia might never recover. What really happened to Jumia? People want convenience, and in a place like Nigeria, that demand is even stronger. With things like hours stuck in traffic, high security risks, and growing crowded urban cities, the idea of ordering what you need from your phone and having it delivered to you sounds like a dream. But the reality in 2012 was very different. Low trust in online payments, poor road networks, delivery systems that barely existed. E-commerce was not impossible. It just had not been proven yet. I remember ordering from Jumia in 2017. This was 5 years after they launched. My neighbor actually asked me, "Are you sure this is not a scam?" That was the reality Jumia was fighting every day. So when Jumia launched in 2012, it wasn't just another startup. It was a bet on a future that didn't fully exist yet. Jeremy Odara and Sasha Poinunek weren't African. They were French McKinsey consultants, the kind of men who looked at spreadsheets and saw continents, but they believed something that most people didn't realize: that Africa's middle class was growing, that smartphones were spreading, and whoever moved first would own the market. They brought in Tunde Kainde, Nigerian, sharp, deeply familiar with exactly why this will be hard here in Africa, and Raphael Kofi Afido from Ghana, who understood the operational maze of building anything on the continent. 4 men, 2 continents, one very ambitious bet. But this idea didn't come out of nowhere. It was backed by Rocket Internet, a company built on one idea: find successful companies in the West, copy them, and scale them fast in new markets. And this time, the target was clear: Amazon, but for Africa. The playbook was simple: grow fast, spend aggressively, win the market first, figure out profitability later. Nigeria was the crown jewel, the largest market. Egypt brought a different kind of stir, a dense urban Arabic-speaking market. Kenya came with M-Pesa, one of the world's most advanced mobile payment systems, which should have been an advantage. South Africa had the infrastructure. They also had Takealot, a well-funded local competitor that wasn't going to move aside. 14 countries, 14 different sets of rules, customer expectations, road networks, infrastructure. Not one Africa, many. Jumia built logistics, launched Jumia Food, even created their own payment system, Jumia Pay. And in 2016, they reached a valuation of over $1 billion, becoming Africa's first unicorn. The narrative was set. Africa's Amazon had arrived. Imagine you run the market. 1,000 traders sell through your stalls every day. The total value of everything sold, $1 billion. But you, You keep only a small commission on each sale. And after you pay for the stalls, the security, the delivery bikes, almost nothing is left. That was Jumia. The numbers looked enormous from the outside, but inside, the machine was expensive to run and too cheap to profit from. And then there was cash on delivery. In a market where most people didn't trust paying online, Jumia let customers pay when the item arrived, which sounds reasonable until you realize what that meant in practice. Delivery riders crossing the city, finding addresses that don't probably exist, knocking on doors, only for the customers to say they changed their mind. Or worse, nobody answers at all. At one point, nearly half of what orders didn't complete. Half. You're building a delivery company where half of the deliveries go nowhere. And then there was also customer behavior. Many people use Jumia not as a habit, but as a one-time solution for a big or hard-to-find item, which meant low repeat customers or a very high customer acquisition cost. So while the numbers looked impressive, underneath the model was cracking. In 2019, Jumia went public on the New York Stock Exchange.
One of Africa's leading online shopping company was recently listed on the New York Stock Exchange.
Online trading company Jumia is seeking to use its listing on the New York Stock Exchange to grow its business across Africa.
Now e-commerce firm Jumia launched its IPO this week on the New York Stock Exchange.
The first African tech company to ever do it. For a moment, there was a genuine pride across the continent. Finally, an African tech company being taken seriously on the biggest financial stage in the world. For a lot of people, it felt personal. The stock surged more than 70% on the first day of trading, climbing from an initial price of $14.50 to an all-time high of nearly $50 per share. Impressive, right? But then it came. Not from a regulator, not from a court, but from a single research note published by a firm called Citron Research, known on Wall Street for one thing, finding companies they believe were lying to their customers and betting against them. Just weeks after the IPO celebration, Citron published their verdict on Jumia. Their conclusion was not subtle. They called it the most obvious fraud we have ever seen. They claimed Jumia had inflated its active user numbers, that others were being counted that were never real, that the company had shown investors one picture while hiding another. Jumia pushed back. They denied the allegations. And to be clear, no criminal charges were ever filed. No court found them guilty of fraud. But in public markets, perception moves faster than truth. The stock didn't wait for a verdict. It collapsed anyway, from nearly $50 a share to under $3 by 2020. In 1 year, when the fraud allegations hit and the stock fell, that pride that we all felt as Africans cuddled up quickly. Because if Jumia couldn't make e-commerce work, who could? By 2022, the growth at all cost strategy had finally reached its limit. Jumia was burning cash, fast. The co-CEOs, Jeremy and Sasha, stepped down. Francis Dufay took over, and the tone shifted immediately. They exited Cameroon, Tanzania, Rwanda, South Africa, Tunisia, and Algeria. Up to 60% of staff were cut. Pickup stations replaced costly last-mile deliveries. Discounting was reduced. The focus shifted to core markets: Nigeria, Egypt, Kenya. Everything became about one thing: staying alive long enough to figure out what came next. So what really happened? Was it the market, execution, or the model itself? Africa didn't reject e-commerce. The demand was always there. If anything, that demand is still growing. But the foundation was not ready. Unlike the US or China, delivery systems are not standardized. Payment systems are not fully trusted. And logistics costs are extremely high. And not to talk of the competitions like Konga, taking a huge chunk of Jumia's market share. Jumia tried to scale a high-cost, low-margin model before those systems existed. That wasn't a failure of vision. It was a failure of timing. The story of Jumia isn't just another story. It's a story of what it actually takes to build something from scratch on the African continent. Something genuinely new and tailored to the market. So the question now isn't whether e-commerce will work in Africa. It is whether it will look anything like Amazon at all.